Hey guys, what's up? Welcome back to another video. This is My Financial Focus, and in this video I'm going to be talking about Epam systems, which, as we all know, just a few months ago experienced an extremely sharp decline in their share price from an all-time high of near about $700 per share to a low of about $186 per share. And since then, they've recovered slightly up to $346 per share. And they recently announced earnings today, and they actually beat the analysts' earning estimates by quite a substantial margin. As we can see right here, it was estimated that their earnings would be about $1.74 per share, but it actually came out to be $2.49 per share. And we can see right here in this article that they point out that this digital transformation services and product engineering company had a revenue increase of about 50% up to $1.17 billion. And their GAAP earnings per share came out to be about $1.79 per share. But they adjusted it for various reasons, which I'll get into shortly right here, to $2.49 per share. And those two reasons are the main reasons why Epam systems today skyrocketed and went up about 10% in a single trading day. So just to sum up for this video, I'm going to start by talking about the actual earnings report that came out for the first quarter of 2022 for Epam systems. And then I'm going to end the video off by figuring out what the intrinsic value of the company's stock price is, and then also compare them to their two main competitors, Accenture and IBM, so we can see where they rank in their current industry. So right here we see in their first quarter 2022 report that they show a couple of their financial highlights for the first quarter, and we can see, as I pointed out before, that year over year from the first quarter of 2021 to the first quarter of 2022, Epam Systems revenue is up about 50.1%. And also, if we look down here a little bit, we can see the diluted earnings per share, the GAAP earnings per share came out to be about $1.52 per share, which is down about 18.3% year over year. But the non-GAAP earnings per share is up about 37.6% year over year, up to $2.49. And these adjustments to the earnings per share were primarily made as a result of expenses due to the war in Ukraine. And basically what Epam Systems is doing is their management is basically writing off a couple of the non-reoccurring expenses that they're currently incurring as a result of the ongoing conflict in Ukraine, because they don't anticipate that a lot of these expenses are going to be carried forward into the future. And so this adjusted earnings per share metric right here is what the analysts are really focusing on, because this highlights the performance of their underlying business operations as opposed to the result of their business as a result of current global events happening. So that's basically all that means. And we can also see right here in their revenues by industry vertical that all of the sectors of their business have increased pretty substantially year over year. We can see that their travel and consumer segment of their business is up 91%, financial services up 54%, business information up 32%, software and high tech up 29%, life sciences and healthcare up 36%, and their emerging sectors are up about 59%. And on top of that, their revenues by geography have also increased, the largest of which is in their European markets, which is up about 63% year over year from the first quarter of 2021. Also, if I scroll down a little bit here, they highlight some of their cash flow metrics, and we can see that from their operating activities, they had negative operating cash flow for the first quarter of 2022 of about $51.8 million compared to positive cash flow for the first quarter of 2021 of about $12.8 million. So they're currently using cash flow to operate their business as opposed to having their business provide them with excess cash flow. And we can see right here in their first financial statement, their income statement, we can see directly, according to the numbers, where the decrease in net income is coming from. It's coming from a pretty substantial increase in the cost of revenues, and especially in their selling, general, and administrative expenses. And that's resulting in a slight decrease in what could have been more income from their operations. And then also we see that their interest and other income net was positive in 2021, very large number of about $5.3 million. And then in 2022, it was a loss of about $165,000. And then also they experienced a pretty substantial hit from their foreign exchange transactions, just basically just the foreign exchange rate that altered the revenues from their business from one area of the world in a different currency to US dollars. And they experienced a pretty substantial loss there, about $22 million of loss from foreign exchange rates alone. And then obviously that's what contributed mainly to the decrease in net income for the first quarter of 2022. And if I scroll down here a little bit, after their balance sheet, of course, I'll go into their balance sheet right now, but after this, we'll see the main reasons why their income statement was hit pretty hard. We can see right here that from the last quarter of 2021 to the first quarter of 2022, their total assets have decreased slightly, mainly as a result of a decrease in their cash and cash equivalents. Their total liabilities have also decreased, and we can see that their total stockholders' equity has actually increased from about $2.4 billion to $2.5 billion. And then if I scroll down a little bit here, we can see right here, this is the interesting part where they actually point out the different reasons why their net income has decreased as a result of the current expenses that they're incurring as a result of the Ukraine war. We can see their selling, general, and administrative expenses increased pretty substantially as a result of what's happening in Ukraine right now. And so they sort of wrote that off in order to adjust their earnings per share metrics to give more accurate representation of their business operations. And we can see that when they wrote it off, their expenses decreased from $237 million to, or that might be 200, I think it's 237,000 or a million. It might be 1,000 or million, I'm not sure, but basically 273,000 to 183,000 in their non-GAAP estimates for their selling, general, and administrative expenses. And they go into more detail right here where they point out that some of these charges are coming from one-time charges, humanitarian support in Ukraine, geographic repositioning as a result of the war. We all saw that, especially in my first video, I went into this in a lot of detail. If anyone hasn't checked that one out, I'll leave it in the description below. But basically, their largest delivery centers are located in Ukraine and Russia, which is one of the reasons why their stock price was hit so hard when the news of the war came out, is because a lot of their business operates out of Ukraine and Russia. And so since then, they've been trying to diversify by hiring new employees outside of those regions. And so this geographic repositioning expense is one of the reasons why their net income was hit pretty hard in the first quarter of 2022. And then also some asset impairment charges from different assets and centers that are located in Russia that they're probably writing down because of all of the damage and destruction that's happening over on that side of the world right now. And so that basically sums up their first quarter earnings report. And to end the video off, I'm going to figure out what the intrinsic value of EPM Systems is right now, and then also compare them to some of their main competitors to see where they rank in their current industry. So we can see right here that these estimates are from Yahoo Finance. So Yahoo Finance analysts are basically anticipating that the growth rate for EPM Systems business is going to be about 24.9% from now till the next 5 years. And so I was a little conservative and I cut that value in half for the next 5 years after that. And this, coupled with the current amount of cash on their balance sheet, as well as the amount of shares outstanding for their business, we can see the intrinsic value per share is calculated to be about $300 per share, with a 30% margin of safety of $210 and a 50% margin of safety of $150. And so compared to their current share price, it would seem that EPM Systems is currently trading slightly above their estimated intrinsic value per share based off of Yahoo Finance's estimates. And it was only a week ago that they were trading at a little bit less than their intrinsic value per share. So it might have been a good idea to buy into EPM Systems, especially when their share price dropped all the way down to $174 per share for a long-term value investment. And also we can see right here on the right side a competitor analysis that I did just to compare them to other competitive businesses in their industry. And we can see that EPM Systems actually beats out their competitors pretty well in most metrics. In gross profit margin, IBM has them beat at about 54% gross profit margin, but EPAM is beating Accenture by about 1 percentage point. In net profit margin, EPAM is beating Accenture and IBM. And in terms of return on assets, we can see that EPAM Systems definitely utilizes their assets more efficiently to get a return from their business at about a 15.43% return on assets compared to Accenture's 14% and IBM's only close to 4%, about 3.99%. So it would seem like EPAM, compared to their current competitors, they're positioned pretty well. And in terms of their stock price at the moment from a value investing perspective, it would look like they're still trading near intrinsic value per share. So depending on the different metrics and growth estimates that people are using to evaluate EPAM systems as a value investment, it might seem that EPAM is currently sitting at a good buying opportunity, but I would love to know what everyone watching this video thinks about EPAM systems. Is it a buy or a sell? Let me know in the comments section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.